Welcome back to another episode of the Market Minute with me, Matt. Man, oh man, do we have a lot to talk about today. Bitcoin, the internet monies your parents don't understand, hit an all-time high today and then swiftly got kicked in the balls. I want to break down what happened there, and I also want to talk about how the old stonk market isn't necessarily looking the best either. And then I also want to be setting up what you should be paying attention to tomorrow and really for the remainder of the week, because you might have thought you saw some insanity and volatility today, but it is bound to get even more nuts as we get to the conclusion of this week. And then to wrap it all up, I want to talk about how the system, the Piper trading system that I use every single day, easily printed $4,000 for me today alone. So I want to break down that everything happened there. But obviously, before we get into the nitty gritty of what went down and what to pay attention to and the trades, if you enjoyed this type of daily wrap up content, don't forget to hit the like button. Don't forget to subscribe. And with that being said, let's rock. By the time the closing bell went dingity ding 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 today for the world's largest casino, it wasn't so bullish of a situation, which I know was a bit strange because most of the time, at least for the year 2024, it's been the bull camp winning and partying until really the entire next day. So a little bit of a rarity here. Dow closes lower by 400 points. Apple shares drag tech down. Now, if you've been paying attention to my daily updates, you know exactly what is going on. Apple looking absurdly weak, and so is Tesla. But before we get into that, let's take a look at the overall market. Now, granted, we just hit an all-time high, so there's no need for this absurd doomsday type of talk. Yeah, the SPY was down 1%, but once again, we just hit an all-time high. Now, the tech-heavy NASDAQ down by 1.8%, also recently hitting a high, gapping down. But yeah, there's a little bit of blood in the water. There's a little bit of bearishness, but to be very clear, in the short term, yeah, it might feel extreme, but as soon as you take a second to step back, zoom out, you realize that we're still, at least as of now, looking pretty good. You know what else is looking pretty good? Gold. Actual gold about to hit an all-time high, very, very close. So for all of you commodity traders, gold, pay attention to it. But I know that might be a little bit more difficult to pay attention to, especially when you see that digital gold is ripping. Bitcoin rises to record level above 69,000, then quickly tumbles in excess of 8%. Congrats to all the people who had the degeneracy, dare I say it, the balls to hold through the big swing 2021, hold through all the rest of it, and now we did hit a new all-time high. To answer what happened, it's as simple as this. Buy the rumor, sell the news. There was so much excitement of it getting up to there and then people locking in their profits that prompted a little bit of selling. And because a lot of people are playing this situation in a highly leveraged manner, a little bit of a drop was a big percentage on these leverage accounts. So they ended up getting margin called, which sold more. And then that's why we saw this precipitous drop and it got crushed. I mean, in the matter of hours, we dropped $10,000. Bitcoin tumbles 10% after hitting a record high, $1 billion worth of crypto liquidation. Bitcoin new all-time high Tuesday quickly turned into a bloodbath, flushing over overzealous leverage traders. Now, if you want to see what it looked like, it was crazy. I got to fortunately film this in real time. Hey, if you want a live trading show every single morning from 9 a.m. to 11 a.m. ET, Monday to Friday, the Matt Kohrs show is live. Feel free to tune into that. Sorry for the plug, but it just felt like it was pretty organic right there. Anyway, we were sitting there around 10 in the morning. It technically hit at 10:03, 10:04, new all-time high, just above 69,000. Awesome. We didn't hit 70K, but we were there, very, very close. And then all of a sudden, the next handful of hours, it was brutal, getting as low as 59,200. Now you might think, why these levels? What's going on? Well, remember, there's a lot of human psychology here. 69K, LOL, first of all, but then don't forget, that is the previous all-time high. So obviously a lot of people are targeting that level. And then to the downside, a lot of people are going to have their stop loss at 60,000 because it's just a nice whole round number. And that's exactly why when it hit, it quickly flushed and then bounced right out of it. I mean, it almost happened instantaneously. Go to the smallest time frames you want to see, but right here, quickly flush below 60. That's where a lot of people have their stops and then bounces right back up. We've seen this time and time again. Don't get caught, especially if you're trading on leverage. Bitcoin hit a fresh all-time high of 69,200 on Tuesday, then tumbled to a low of just below 60,000 in a violent sell-off. Once again, it's because of the leverage traders. The correction triggered cascading liquidations, flushing out over over $1 billion worth of leverage derivative positions across all digital assets. It's brutal. It's a good lesson on leverage. In the long term, this does not change what I'm doing. I wasn't going to sell if we hit 70, 80, 90 today anyway. So the fact that we see a little bit of a discount, actually, in complete honesty, if we went lower than 55, I was ready to buy even more because I want to get in on these discounts. Now, obviously that opportunity didn't come, but when it comes to me and Bitcoin, I'm not actively trading it. I'm a long-term investor. So yeah, it's super fun to pay attention to in the short term, but I'm very, very confident that in the long term, this will still be an excellent store of value, and Wall Street agrees. Milestone, the 10 Bitcoin ETFs did 10 billion in volume today, smashing the previous record set last Wednesday. Volatility and volume go hand in hand with ETFs, so not totally surprised. That said, these are banana numbers for ETFs under 2 months old. IBIT, you have FBTC, BITB, and ARCB with record days. So 4 records culminating together for one massive record. And obviously there's insanity, there's volatility, there's craziness. So yeah, we would expect those numbers to be higher, but that's exclusively what is being reflected. So really no surprise there. I'm expecting things to not only in the crypto market, digital gold, actual gold, but the old stock market to continue to get more crazy this week. Let me explain what I'm talking about. Wednesday, March 6th, 8:15 in the morning, an hour and 15 minutes before the market opens, we get the ADP non-farm employment change. And just so you know, the unemployment report does come out this Friday as well, but more on that later. The big thing going down Wednesday, March 6th, I pray you are watching this video in time. Fed Chair Powell will be testifying 10 a.m. ET. Yes, I will be streaming it on the live channel. Here's what you need to know. Fed Chair Jerome Powell heads to Capitol Hill Wednesday, once again, 10 a.m. ET, with market intent on getting more clarity about how the central bank plans on proceeding with monetary policy this year. We're in the current phase of monetary policy where they jacked us up to 5.25%. And the question is, when are we going to start coming back down? Some people a couple months ago thought it would be in March. Right now, the situation doesn't look like that, but that's the goal in question. When are they going to loosen monetary policy, which will have a massive, massive, massive impact on bonds, yield, gold, Bitcoin itself, the dollar, other currencies, the entire stock market? This is a massive, massive multi-trillion-dollar decision. Central to the question how the Fed acts from here on how it is to view on inflation and how Powell expresses that. Just as a reminder, this is going down. Then he's doing another one with the Senate on Thursday. So back-to-back 10 a.m., 10 a.m. But don't forget, a little bit later this month, and I'm talking about March 20th, that's when we get the next decision from the FOMC meeting, the Federal Open Market Committee meeting. That's exactly where they decide what they are or aren't doing with the Fed fund rate. So mark your calendar for that. Before we get into the other things that we should be paying attention to, I want to remind you, we're still in earnings season. And I know right now we are seeing some weakness in the market, like such as Apple, Tesla, and I'm going to be showing you those in a second, but we're also seeing strength. The semiconductors, NVIDIA, AMD, those lots. Well, don't forget, after the market closes on Thursday, we're going to be hearing from Broadcom. And since we're talking about it, let's take a little bit of a deeper dive into some of these major equities, at least major in terms of they're clearly having an impact on the market. Apple breaking down late February, getting hit with the antitrust from the EU on Apple streaming, and that is causing Apple to fall from 182 all the way down to 170, diving about 7%, which is billions and billions and billions of dollars. On top of that, Tesla also not looking the best, breaking down from this failed inverse shoulder, head, shoulder, quickly diving and looking at 175. If it can't hold that, you better buckle up. On the flip side, surprise, surprise, Pelosi crushes it again. The one green one of the day, NVIDIA, not hitting a new all-time high, but gaining a nice $7, trading at $861 in post-market right now, and just continuing its absolute rhapsody from the past couple of years. AMD, another semiconductor play, looking pretty strong, hitting a new all-time high yesterday. The list goes on and on and on. This ETF is tracked by the ticker symbol SMH. Once again, this is an exchange-traded fund that tracks the entire semiconductor industry. But like I just alluded to, AVGEO, that is the ticker symbol for Broadcom, reporting after the market closes on Thursday. There's definitely going to be some sizable moves on this one. It is large, it is important, it is impactful. Definitely do not miss out on this. So yes, crypto going crazy, Bitcoin really going crazy. That's aka digital gold. Actual gold also going crazy. We have a handful of companies. Some are looking pretty strong, Some are looking pretty weak. We have earnings, we have Powell, we have a lot going on. So with all of this hecticness, I do want to let you know, I give you a free newsletter every single weekend to your email inbox where I break down the previous week. I let you know what to pay attention to in the upcoming week, all those major macroeconomic events, such as the fact that Fed chair will be testifying, all the earnings. I highlight the ones that I think you're going to care about. I give you a seasonality update for every single trading day of the week. For example, Wednesday, March 6th, this day commonly favors the bears. The bulls have only won it 44% of the time. And when they do win it, it's not that sizable. This is the equity curve generated from buying at open, selling at close on this individual day. It gives you an idea of the seasonal bull camp, bear camp, who is historically the winner on the individual day. And then I break down some of the option strategies and then also the charts that I'm paying attention to. But more importantly, especially focusing on this option strategy, if you've been watching any of my content, if you know what I do, I love to trade degenerate 0 DTE options. So early this morning, when I saw that the market was having a little bit of weakness, I was patient. I sat on my hand. I waited and I waited and I waited until Piper, which is a trading strategy that I generated myself, fired off. At 10:09 in the morning, Piper said, "Hey, I'm bearish with a 4 out of 5 confidence," and gave out these trades: a SPY call credit spread, a Q call credit spread. And if you know anything about call credit spreads and where the day ended, these both ended up printing, which is nice because that means it returned $46 for its smallest unit size of 354. Obviously, you could scale this up to your own heart's content. For me, I chose to use this signal and I fired the trade off on the SPX, the actual S&P 500, instead of the SPY ETF. That's just because it's European versus American. That's a nuanced detail. More than happy to describe it in the Discord. But as you can see, the trades here, sold it at $1, bought it back at 15, which means I profited 85%. And when you look at the fact that I had 50, that's where your boy got $4.2 thousand before fees. And thus far on the week, this week alone, from March 4th to the 5th, only 2 trading days, I am up 7.6 thousand, continuing the streak. Right now, I believe the current streak is 7 days in a row. Obviously, very excited about it. If you're curious about this advanced trading strategy, how I do it, how I look at the market, stuff where it's a little bit more than, oh, I had a gut feel. I'm saying, no, I approach the market with, it's referred to as conditional probabilities. When I'm in situation A, I look at the odds of B, C, and D. I take the high odds, and thus far, it's been printing. If you want to learn how I approach the market, you can trade with me. There is a Discord, the Goonie Discord, link below. The first month is completely free. Just enter the code Goonie. And I think within that first month, you're really going to enjoy it. If you don't, no harm, no foul. You didn't spend a dime, but I have a feeling the fact that in one day you could pay for the next month, in 1 week, you could probably pay for the entire next year. And if you size it up, yeah, you can look pretty good. And hey, check out all the newsletters. You don't have to believe me. I transparently post all of my trades as soon as they're executed. So it's none of this hindsight bias, Monday morning quarterbacking type of a thing. And I get it. Go ahead, do your research, and I think you're really going to enjoy what you find. And honestly, this is a great way to do it because we see the insanity of Bitcoin, we see the insanity of gold, and we see the ridiculousness of what's going on with the Fed and monetary policy generating quite a bit of volatility, which for us means there's quite a bit of opportunity. I don't want you to miss out. I hope you enjoyed the breakdown. I hope you are crushing it in the market, and I'll catch you again in the next one. Have a beautiful day.